Good morning. Remember the way I do my daily market analysis. I come for the day, and then I don't need to repeat unnecessary some places unnecessarily. The Confluence I do, of course, you see all of this. This is my weekly key level that I've done before. So look at it there and to this point. Now, so I don't want to go back there. So first of all, you already have that imprinted into your chart. And then, so what I want to do is I want to look at the point of interest. Having a look at the market is trying to return to an uptrend. Okay. Now, I told you about what to do. So look at it on the daily time frame. So what I may want to do now today is to adjust my previous day high and low, because the other day you find that my previous day low and high was here. And then, so I'm going to adjust to this now today. So this is my previous day high, which align with the 100. Okay, so I want to adjust if you are my student on the Forex inner code, Felix Forex inner code, you can get this alignment. Okay. Okay, I think we're in order. Okay, so I've gotten the previous day high and low, but if you see something that just happened now, the previous day high and low, which is this candle, has actually aligned. So we're actually bullish today. So gold is going to break out. It's trying to break out and all of that. Okay. So now let's quickly go to do, because that's what I check for the day. When I come, I want to look at my daily candle and then see the previous day high and low on my daily candle. And then to still check some important pivot point that are actually going to make significant impact on my trade. Okay, so if you look at it now, we're going to have another pivot point here. So I put my horizontal ray to mark my pivot point. This is another pivot point. Now, some pivot point may not be too significant for me, right? So this is a pivot point. Then we have another pivot point over here. Look at it. Now, pivot point is just an important reference point that market could actually get to and start reacting. Are you getting it now? So now, if I've done this, so looking at the bigger picture, I have my pivot point up and down here. So when market get there, I know what to do per se. So now let's go. So this is daily. Now market's about to break previous day high. Let's see how it's going to break, because market open, and that means this market open and actually came down to make a low before moving a high. Okay, so sometime and then I want to move to 4 hours quickly. Now I'll go to 4 hours. Now, so in 4 hours, you can see massive and lovely market activities now. So now, so lovely market activities. So don't mind those lines, because this is our psychological point, remember? So now let's go and checking this market properly. So this is where the market actually, this market you're seeing actually started here. So if that's the case, so there was a break of structure here. I don't want to draw anything. And then we have a sweep of liquidity. Sorry, this is sweep of liquidity, or this is call it what's it called? Call it break of structure. Well, sorry, call it market structure shift. Then we have it up here. Then market return back down to this point. This is still the lowest here. That means we have the lowest to maintain here. So if we maintain lowest here, then what happen? Market move up here and then break another structure. This is a break of structure. And now having break the structure, you need to understand that, okay, the next thing you want to have is the origin that bring about that break of structure, which is long candle here. And then we have that market came back to it and then actually mitigated. So that mitigation you can now see that this up here, this pivot point here is more like a kind of, let's look at it. If I want to make it to a round figure, if it's a littered figure, I want to make it a round figure. Let's go over. Okay, let's look at it. Let's look at the coordinates. Okay, I think it's cool. It's okay. So let's just forget about it. It's there. Now, so this is the point here. So that means we need to actually break above this. That is 4,045 or 46 thereabout. And now we actually need to break above it. And then that means ultimately the market is still somehow bearish. So, but we are trying to recover back. So we have this major point and this major point as where we need to travel off, right? So now, this next thing we're going to do is very simple. What we're going to do next is that I want to go to 1 hour time frame. I don't want to mark unnecessary place. Here was the break that brought about this low. This is an external high and low because this is a break of structure externally up there. Okay. So we have this up here that has not been mitigated. I don't want to touch it. All right. So now let's go to 1 hour quickly. Going to 1 hour is very simple. So what I want to do in 1 hour, so move up to this 1 hour time frame. All right, so 1 hour time frame is very simple. Now, so what do we have? We still go back to this source though here, and then we have this a move of the market, and then we return back to this point. So that's like a change of character. Then we have a break of structure, we have a break of structure, then majorly have this. So externally, this is this, and then this is market structure shift because this is the external break of structure that was coming down. So we have a break of structure here, then we have this point, and now this external, right, change of character. That's all right, market structure shift. Then we have this is the lowest. So we have this for us break of structure. And then when we have this break of structure, of course, we expect the market to travel down here to respect where this order flow. So, order block, which point origin now here. Look at it here. So we got mitigated. So that make a lot of sense for us that we are out of this point, right? Now, these are external, all right? So we have some internal movement, and which was making people to trade and make some money. That was good. So many people do not understand why the market had to travel this far because there was an unmitigated order block that was here, and it came to be mitigated. So we have up there here now. So there, all this drag we're struggling now is to rise up to this point and actually break it. Then we have another retest possibly. So now let's quickly look at it. If that is the case, so what are we looking at? So what we're looking at is very simple. This had been mitigated. All right, this other block has mitigated. We need actually continuous move up, as it were, on 1 hour time frame. So we have a mitigated order block. We have unbreaking a potential break of structure over here. So then we need to go to 30 minutes probably and see another kind of a thing. But please take note, in between all this, we have been making money because we go to 5 minutes and then to make money, right? So now let's go. Then if we look at this now, that we have broken the structure, right? That we have broken the structure on 30 minutes, right? So you have this in 30 minutes, a break of structure in 30 minutes. We have some kind of level of inducement here. So we have a change of character on 30 minutes here, right? All together up here, right? And then we have the market to return to the origin. But what really happens is that I think the market take the breaker block to work with. So we have a break of structure above here. And then, of course, we have this origin, and which was respected. So that means on 4 hours, on 30 minutes, we're actually in order, right? Okay. So let's quickly look at other points of interest that are very significant for us to work with. Okay, so now let's move on to this point. So we're actually progressing up now, but just to know that we are working within the internal structure of this 1 hour time frame that was still pending here. So understand that. All right. So then let's go to 15 minutes probably where we want to be taking small trade or having a consciousness that we're actually returning back up. Okay. Now, so let's go here on this 15-minute time frame. So we have this choppy market move down. Still, we still have in here. And then this is a break of structure. And then we have a move up. And then so we still have this as the lowest, right? Now we begin to range some kind of movement here. So what you can see invariably is that you have a shift in market structure here. And then we have the market mitigating this other block. Makes sense. Then we move up massively. And this massive move up here was to either sweep this liquidity or actually break it as whatever. And then we're able to get it broken. Then when we broke that, so which means this other block become invalidated, like a breaker block, right? So what happened? This is very simple. What happened is that the market need to have to come back to a point of interest. And this point of interest was that we have this overlap. So this overlap was what probably was respected. Let me just show you, because this is another block that was supposed to be connected with now. So this overlap, or probably we have this an overlap down here. And now another thing that I played out, because we confluence this with psychological level, and then this actually played out. I think we traded this market and we make some money. All right. So we have this break of structure now. So because this one has taken this, so we have this break of structure. Then we return back here. Now we have a major one. This I think this was the major one. After this was the major one. So we have so many areas of confusing kind of point. Then we have this area, we have this area, we have this area. So yours was to pay attention, the one that stand to work and the one that didn't stand to work. So eventually, I think this stand was the word work out eventually for the market to bounce. So if you don't know how to pay attention to all of this, after we broke those structures, so now we're actually breaking a structure now. That's what it means. Because after breaking this structure, so this is the major one. So, but we need the body close, and then this is a resistance because of psychological level. And remember, this is yesterday high. Okay, so this psychological level need to be taken off. The ones who are taken off of this psychological level, that will make a lot of sense. But now, so what are we looking at? We're able to break above this psychological level. Remember, this was mitigated on 15 minutes. So if we break above this psychological level, this is going to make sense for us. Okay. Why is it going to make sense for us? Then we need to break it and finally retest it. So that means we're looking at 3995 region to range, and then before we can break out of this point. But take note, if we're able to break that, that means we have potential point of make market to return back to eventually for another buy. So which is going to be here. And the next one, what here? Or depending on the last candle printed. You get it now? So that means we are looking at potentially some new order block that will be formed, or even this candle, if it become red eventually before breaking out and all of that. So when breaking out of this point, so the only thing I'm going to do, if you break out of this point and retest, I'm going to be looking for a buy here and then targeting this sell here, right? So you know how we do all of those, our coordinate for, what is it called? Psychological key level. So I put it there, I clone it up here, and I go about again to add. So the last one is 400. So the next one will be what? So my student, the next one will be 4010.00. Right, this is another psychological level. Then I can open it again on and on. Right, then clone it. So I then change. So since the last one is 410, so what you want to have is 420 and then 0.00. That's another level. All right. So then we can move on, maybe probably get back to this up here. So let's take it down. The next one, clone, break it, and then change the number, right? So 430, that's 4030. So 4030.00, that's another psychological level, right? So I can still do on and on till when I get up to this point. So just not to waste much of my time. 440, 440.00. You get it? So I can put the last one that will be in between this point. 430, 440. So just to clone, then I go ahead 450, right? Make sense? Yes. 450.00, right? So this is like my major or main, what called major, okay? We have major uh, psychological level and minor psychological level. So now you can see the market the way it is. So you know that we should be traveling up right here, because all of this point here, here, excuse me, all of this point here, here, even getting to all the psychological level, these are liquidity area, right? Then you can have this place now as a kind of set side liquidity. So if you want to adjust this one to the nearest whole number, right? So you could find, but that's not even necessary. So probably you can just put it 45. So, but it's not necessary, okay? Or you can put it 45. It's going to align with your profit level. So let's go this here, all right? And then remove this one 45. 0, okay. Okay, something like that. And so I think it's just let it be to where it is, because if we're going to do my profit taking level, that's where they get aligned with it. Okay, so we have good way to go on this market. So, but you need to, this is a resistance now that we're, and these are liquidity. You could sweep it up and then crash down. So that means if you sweep it and return it back, you're looking at coming down to this order block. All right, this is a potential to be formed order block if we break out of this point, all right, and continue to rally probably. So here, breaking and retest this, I'm buying to sell here, all right, buying to sell here. Now, then I'm going to do minor profit taking level. So minor profit taking level. So minor profit level, probably since it's as if we are going up. So I'm going to be looking at taking my trend line and then marking, just mark like this. So let's mark this way, just to mark. Okay. So then I just mark and then I label my mark. So what am I labeling it to be? So just go here. What am I labeling this guy to be? That is TP. TP. Okay. Can we make it red, right? TP. TP. Okay. The middle and then center. Okay. So now what's my coordinate? That's going to be, so the last, so 95.00. 95.00. Also remember, the same thing is going to be duplicated here, 95.00. Okay. So now, even this point that I'm going to be having now, they're going to form both profit taking level. That is, this is 50 pips. From here to here is 50 pips. So they're going to form what we call, so I clone this one, right? So let me just clone more. Just clone more. Just clone more. Just clone more. Okay. So now, let me take them up one after the other. So this one is going to be, I want it to be at this last point, which is above, this is 50, so 55. You understand? I want it to 55, 55.00, 55.00. You get it? Uh-huh. So, okay. The next one will be 45.00, 45.00. Mm-hmm. 45. You see it now? So this one is close to that point as you just leave. So the next one will be 45.00, 45.00, 45.00, 45.00. Okay. I think I've done that before. Okay. So maybe I just need to do 35.00 now. 35.00. 35.00. This one. That'll be how many? 25.00. Oh, so we're in another place now. You understand what is happening? Now we have to change the figure to 5, to 4. Four zero 25.00. You understand? 4025.00. Okay. You just have to understand the coordinate, the line you are. So we are now in this line. That is 45. That's 4015. 4015. So we need more to clone. So let's clone one more. So this one will be 4515. Am I correct? Yes. Okay. 45 what? 15. You get it now? So there we go. Oh yeah. Sorry. Four zero. I think there's something that just changed on it. Four zero 15.00. 4015. Just to erase this one and click outside. Don't replace any figure there. Okay, so let's have one more. You can see the market is shooting out already. So 4005. You understand? Because from that 10 now 4005.00. And see, when you are trading, you don't need to have too many things. So just face. So I think gold is enough for us for day trading, like I said before. So now we are here. Now remember, this other block is not yet valid until we break out of this point to now break structure. Then we can now say, oh, good, we are. You understand? So if you like, you can go back to 5 minutes. Right? So if you go to 5 minutes, for instance. So we needed to break out of this. You can see yesterday high, number one, and it's a resistance point. So we need to break out of that. Once we break out and retest it, so I can even go to 1 minute to see when we retest, and I will enter and put my stop loss below this point. And then, so I've traded this morning, because I bought here. We'll go to 1 minute. Let's go to 1 minute, 3 minutes. You're going to see. Now, what is the supporting stuff that's going to ease your trading in this at this point? Because this is a resistance. Now, if you get, see, it's rejecting all this place. This is on 3 minutes, rejecting this place over and again. So if you get continuing to reject this point, then I'll have to sell, right? I'll have to sell. And then when I sell, I'll be targeting here, this support, right? Or targeting this order block or into the support. So these are the fantastic thing about gold. You don't stress yourself to trade gold. You just being mechanical. Of course, you can see this is a three combination I have here. Felix past strategy combine three things here. Number one, price action. Number two, level of some high level of ICT, right? Number four, the normal support and resistance, which is the psychological level. So which is the price action, right? So this is a very fantastic trading kind of strategy that you don't even, so it's a hybrid strategy trading style. Okay, so we're looking for the market to break out. So if I go to 1 minute and we have a breakout, so look at it, we have a breakout about to break out now. We have a breakout and retest. We have not had that anyone. This is psychological levels. You can see the psychological levels a bit above the previous day high, right? So if we break above it now and retest it 1 minute, now we're having one candle about to break. So like this one candle close and couldn't break above it, reject, and then this is a sell down. But this sell only came down. So if I put the other guy here, you will see that it only came down to that 50 pips. Okay, so meanwhile, I actually bought from here and sold from here. We can see now on 1 minute, we kept having this. So on 1 minute here, look at it. This is a breakout, though it even went to the almost, it went to the first take profit. So this retest is actually my entry. Maybe I have one or two entry, and one take profit at this point, and second one here. See what it did? It returned back to that level, and then so almost like to hit my stop loss and then continue up. So if you know what you are doing and you're actually in the trade, you will know either to add more position or not. How will I know? After when this was broken, then you want to enter here after. These are the engulfing candle. This engulf this one. Then the entry here. Of course, the stop loss will be below this previous low. And then finally, the market give you what you're looking for. But you can see that if you are a scalper day trader and you didn't face gold like this, you'll be jumping around and eventually market will leave you behind. Okay. So now the other kind, see now the rejection still continue. So the rejection still continue. So let's take this one not to confuse us. Potential. It is a potential order block. So not yet confirmed order block. So if all this don't not being equal, though we have not breaking this. So now if you come to a rejection because it shows that the kind of rejection already. Look at it here. It's a rejection. So that means if I'm going to sell now, short, and then probably maybe after this candle close, and if you close and engulf the way it is, to my stop loss a little above, or sometimes can take it to that at this thing, then I'll be targeting this other block. If I'm going to target this other block, that's going to be a massive take profit for me. But you must allow this candle to actually close negative, okay? Because this pin bar inside is a rejection, and so now some don't mind because snapper entry trader don't mind. But if they go back to 1 minute now, all this thing you are waiting for, they will have seen it. Okay, let's look at it. Yeah, so you can see in 1 minute right now, this is an engulfing candle. So you want these candles to still equally reject, which is going to reject the way things are going. We have been having test of this 1, 2, 3, 4. So then you start targeting. If you're targeting 1:2 risk reward, of course, the stop loss over there. Okay. So targeting this psychological level to take profit. So you can see on 1 minute after this engulfing candle, this is a rejection. Then sell down to this order block, of course, first targeting this support, which is the psychological level. Okay. Then so if you now extend back to 5 minutes, you will see you're already in trade before Jack Robinson. So whatever that is running now, you already know that, okay, how much is the as 25 pips. So if you use $0.125 is what you're going to lose, right? If you use 0.2, you're going to lose 50 bucks, 50 something bucks to make, to get back to your last point. Wow, 1:5 risk reward. That's crazy, you know? So that's how you trade. Okay. So, but basically, you just know that, okay, you are going against the trend because this structure has not been broken, but we're just having a kind of level of rejection. And that's what you are doing, and that's why you are doing what you are doing, right? Now, so now, if we now infuse our strategy into it, what's our strategy? Now infuse your tools into it. Let's add those tools to it. So this market, you can see now is selling massively, right? Makes sense. This is how you just, if you stay with gold with this, off time or not time, you'll just be making more money because gold is always moving. That's the truth. Gold is always moving. Yeah, gold is always moving. So let's go and now add this PA tool. Yeah, remember I told you I have different tool that can help you. Now, so this is kind of sweep of liquidity you did there, but not too obvious. A kind of sell side, buy side liquidity kind of a thing. So now, this one told you that this was a break of structure. Yeah, change of character. Yeah, because this is a break of structure on 5 minutes. Yeah, that this is a break of structure on 5 minutes. This is a change of character. Now, we have not had a return back to the source that caused the change of character. So we go 5 minutes right now. Then you are going to have something inside like this. So this one just align. All right. So this one just align inside this and on top of this psychological level. So that means you are good now. So if you're going to target here, so but of course when the market is doing, you are monitoring the market down to the point where you want it to be, man. So that's as simple as possible. Okay. So if I really messed up because I didn't go to take a trade on time on one of my accounts. So let me just try to do that here. So there's an account I was building, and I actually have forgotten that account for a very long time. Okay. So, but remember what you actually wanted, because it's like somehow you're looking at a kind of bullish market move. So if you break out of this point, then it stops you out, no problem, no hassle. Then you want to look at the breakout structure, and then that means you're going to have another kind of order block that you have to set for the market. That means this refuses to be mitigated. That's exactly what's happening. So, right. So, ladies and gentlemen, that's one thing I have to have you. Now, if I want to add momentum indicator to it, it's MACD. And then you can see that MACD is showing potential, though, showing potential of like a divergence. Well, this is 5 minute kind of a thing. This is a lower high. So look at it here. It's showing a kind of sign of divergence here. Okay, why this one is showing what something higher? You understand? So let me go to this place and do that example. This account was impacted too much negatively, too much. Is it good? Yes, good. Okay, so I've shot, even though I'm late on that, but I've shot that market there. So look at this MACD, a divergence. So it means if you are taking this, you can add this to your MACD. Know how I change my MACD to MT5 style, and then that's exactly what's happening right now. And then so my stop loss will still be the same thing above that psychological level, and then market continue to move. So I just entered that one now, but I don't know, late anyway, but still just I'll make $2 already on that. Okay, so this is very, very simple to understand and to trade with, as simple as possible. For those of you who are on in our group, in our call, I'm sure you have already following and practicing gradually, one step at a time, to understand. So the next thing I'm going to do is to do about swing trading, especially on those currencies, because I've told us the best strategy on the currency is to swing it. Why this one is to day trade, scam it, and all of that, because this has so much volume. So imagine if you have entered, when I say entered here, so at the center of it is 50 pips. So if you use 0.1, that's already $50 when you get there, right? Then if you get here, that's going to be 100 pips, that's $100. And then if it's going to travel down to this next one, that's 100 and something pips. You hear me that? Yeah. So that's one of the things you need to understand. And one of the other things is that while you are trading, don't entertain unnecessary fear. Accept if loss is going to happen, let it happen. If profit is going to come, let it come. That's one thing you need to understand. Okay. So if you're always scared, and then but always set your parameter, they're very important. So while I'm doing this now, I need to go set my parameters. Okay. So, ladies and gentlemen, thank you. Pay attention. Utilize opportunity as much as possible so that you can be in good profit mode. Let's ride the market. Let's make the money. So check the comment section, use the link, register on our broker, and let's work together to build up this financial system. Thank you. Plan B Xpress.